The French economy is collapsing. Over the last 5 years, France has gone through 5 different prime ministers, and the last one has lasted less than a month, because the French economy is collapsing, which is leading to a complete collapse of the French government. Fixing the French economy is way more difficult than most people imagine, and there isn't a single politician in France who is ready to take the responsibility to restructure that economy. But if France is not going to do anything anytime soon, then the crisis is going to be way bigger than most people can possibly comprehend, and that crisis could lead to the end of the European Union. If you think that I'm exaggerating, let me show you. France has been spending far more than it's earning for the last 30 to 40 years, but in recent years that got way worse. Since 2020, France is overspending and running a huge deficit. In 2025, France has earned a little over 1.5 trillion euros, but it spent a little over 1.7 trillion euros, and the trajectory is very clear. That deficit is not going to be solved anytime soon. The deficit currently is about 170 billion euros, which is a lot of money. If you compare it to the United States, that's not a lot, but the US GDP is over $30 trillion, while the French GDP is a little over $3 trillion. In fact, even though that France has a smaller economy compared to the United Kingdom, the French government is spending much more than the UK government, because the entire French economy is a state-driven economy. You can even say that it's a socialistic country. It's not a capitalistic country. That's why you never heard about great companies emerging out of France. All the large companies in France are state-driven companies. They don't even have a tech sector. It is impossible to build a tech company in France. The AI revolution is not happening in France unless the French economy or the French government is going to interfere and will fund a certain company in order to succeed. In fact, if you look at the budget of the French government, you will suddenly see something seriously bad. First of all, the public revenue, or the revenue that the government is collecting in relation to the GDP, is about 50%. Half of the French GDP is the government collecting taxes from its citizens. Compare that to the United States, that stands at around 17%. But this is just part of the problem. What drives the French economy is the government spending. That stands at around 60%. 60% of the French GDP is being driven by the government spending. So if you remove government spending, the French GDP will stop growing. And the French GDP is not growing as much as the Chinese GDP at about 5 to 7%, but rather it barely grows by 1%. It's not even matching the United States that grows between 2 to 3%. In fact, if you compare that to the United States, only a third of the US GDP is being driven by the government spending, even though that the US government is running a $2 trillion deficit and is spending about $7 trillion. Even in Japan, where the government intervenes a lot in the economy and the entire Japanese economy is being driven by the state, that ratio is about 41%. In the UK, it's 44%. Now you can literally understand how the French government or the French economy works. The French economy is basically one giant corporation that is called the French government that is driving the entire economy. It's not privately owned corporations like in the United States, and that's why you never heard a single French company coming out from France that they're dominating the world. It is impossible to do that in France. The French government provides some of the best welfare programs, as if the entire French government serves people. Now, on one side, it is great, but on the other side, someone has to pay for that. In France, everybody is insured, and 80% of medical expenses is being paid by the government. So as long as you're a resident of France, as long as you're a citizen of France, you don't have to worry about medical bills. It is completely covered by the French government. Unemployment benefits could last for up to 2 years and 75% of your previous income. So if you're making $100,000 and now you're unemployed and you're looking for your dream job, the government of France will pay you up to 70% of your previous income, which is literally one of the highest in the world. There aren't many countries that can provide you with anything even close to that. Just compare that to the United States and suddenly you realize how generous the French welfare program is. Pensions in France could be as much as 60% of your income. So if you used to make $100,000, you can expect $60,000 of pension in France. Compare that to the United States. You're paying a payroll tax. At the end of the day, your Social Security benefits on average is around $2,000 monthly, or about $24,000. The best or the maximum amount of Social Security benefits that you can receive in the US is about $5,000. In fact, the French welfare program is so generous that it provides monthly allowance to families that have children. The French government is like, you have children, we are going to pay you money. In the United States, it's slightly different. The government is providing you with tax deductions for having children. In France, the government is directly paying you to have children. The more children you have, the more the government is going to pay you. Can you imagine something like that in the United States? It's impossible. There aren't many countries that provide anything close to that. The minimum wage in France is about $14 an hour. Even though that France is not even close economically to the United States, the minimum wage in France is double that is in the United States. Now you can see how the government is protecting the French citizens. But you have to understand that this is not for free. There is nothing that is called as free lunch. Somebody has to pay for this. Either they're going to be very high taxes, or the government will have to borrow a lot of money to ensure that is happening and this is possible. The French welfare program expanded back in 1970s and 1990s. And because of this welfare program, and because the government has to spend so much to ensure that these welfare programs are working properly, it is running such a huge debt to GDP ratio that stands at around 114%. The latest data is even 118%. It's literally one of the highest debt to GDP ratios in the world and the European Union. And that is without even considering that France has one of the highest taxes in the world. The French taxation system is very different than from the United States, so I'm going to try to explain it by giving you an example. It's much easier to understand that. Let's have a $50,000 income job. That's not a lot of money, but in France, 50,000 euros is literally a really great income. So if you're creating a job that pays 50,000 euros in income, how much taxes do you think you're going to pay? The employee is going to pay almost 13,000 euros in taxes. That's about 25%. That is way higher than the United States. But besides you paying taxes, the employer or the company, the business that created that job also has to pay taxes. That's not unique to France. In the United States, the payroll tax is being paid not just by you, but your employer has to match it at 6.2% as well. But in the case of France, your employer with this kind of income has to pay a 16,000 euros. That's about 33%. So your employer is paying much more taxes for creating that job. And now you know why businesses in France don't have incentive to create jobs. And that's why you never heard a lot of great tech companies moving to France and building businesses over there, because apparently you have to pay far more taxes because you created that job. Where is the incentive to create a job? Where is the incentive to build a business? To create a job that pays 50,000 euros, it is going to cost the company 66,625,000 euros. That's a lot of money. The real money that you are going to receive will be $37,100. Between you and your employer, both of you are paying almost $30,000 or euros in this case in taxes. So the job pays 50,000 euros, but the total amount of taxes that is being paid on that income is 30,000 euros. That's almost like 65 or 68% of taxes on that kind of a job. And we're not talking about the jobs that pay hundreds of thousands of euros. While in the United States, the total amount of taxes on an income that pays $50,000 is around $11,000. And this is the total amount of taxes that is being paid between you and your employer, including the payroll tax and the income tax. So even though that the United States is far more wealthier, you're paying far less taxes in the United States than in France. And now you understand why France has such generous welfare programs. So in the United States, you will be left with $42,000, while in France, you will be left with 37,000 euros. On top of that, when you got that money in your pocket, you're going to go and spend. In the US, you have sales tax. But in France, you have value-added tax at 20%. So every time that you spend that money that you already paid in taxes, you are paying an almost 20% in taxes every single time that you're spending that money. France even has a wealth tax that ranges between 0.5% to 1.5%. Imagine having a wealth tax in the United States. If you have a wealth tax, real business people, wealthy people are not going to come and establish their businesses in your country because, you're working so much, you're working so hard, you're building businesses, making so much money, and suddenly you have to pay a wealth tax that doesn't make sense at all, besides all the taxes that you have to pay. I can't even imagine, how is it possible that somebody has to pay more taxes by creating that a job? What is the incentive to create jobs? What is the incentive to build businesses? So when you're paying so much taxes, you have very high expectations. And that's why it's a political suicide for somebody in the French government today, for a French prime minister to say that I'm going to cut welfare programs. Yes, you guys been paying a 60% income tax and 70% in taxes, and you're paying literally the vast majority of your income in taxes. And now we are going to cut your pensions. We're going to cut your healthcare benefits. We're going to stop paying you allowances for having kids. That doesn't make sense. And that's why it is a political suicide for any French politician to do anything like that. And because the burden on the French government is rising, the cost of borrowing money is rising. Investors are looking at you and you're looking at your economy and you're mismanaging your funds and you have to refinance your debts. But investors are very scary, are afraid of your future, so they're acquiring or requiring a higher interest if you're going to borrow their money, which is why when the cost of borrowing money is rising, it's pushing the government or forcing the government to spend even more if it's not going to restructure its spending. In fact, the 10-year government bonds has reached 3.5%, which is one of the highest rates in the entire European Union, higher even than Greece that had almost defaulted on its loans back in 2008 and has one of the highest debt to GDP ratios. So borrowing money from the French government right now is extremely expensive, which worsens the entire situation. So what are the solutions that we have on the table? On one side, you can default on your loans, but this is not a viable option because France borrows money in euros, and if France is going to default, then the euro is going to default, and that is going to jeopardize the entire European Union, which is going to put an end to the European Union. Like in the case of Greece, Germany cannot save France because Greece is a very small economy and Germany could actually bail it out. But France is a huge country, is a huge economy with a GDP of over $3 trillion. So saving France is almost impossible. The second option is, of course, to create massive reforms, to restructure the economy, get rid of all of these welfare programs until the French government is going to reach a debt to GDP ratio of about 70 to 80%, and then it can bring some of these welfare programs that are sustainable in the long run by running a very small deficit or not running a deficit at all. If it's running a 1 to 2% deficit rate, it's fine, but nothing more than that. If you look at the demographics of France, the retirement age is 64. So you have a huge chunk of the population who are above the age of 65 or 64, and these people are not going to deliberately vote for somebody who's going to promise them to get rid of their pensions, to promise them to cut their medical benefits. And then you have a big chunk of the population who are below 20, and these people cannot possibly vote, so we can actually consider these people. And then you have a huge chunk of the population between 40 to 60, and these people are going to retire sometime between in the next 10 to 20 years. So if you're going to retire in 10 years from now, are you going to vote for a politician who is going to promise you to cut your pension? Well, of course not. So there is a very tiny percentage of the French population who is actually ready to vote for a real change. These are the young people between the ages 20 to 40 who are going to pay the price for all the mistakes that the French government has done, because this debt pile is going to rise and rise and rise. And in 20 years from now, the catastrophe is going to be way bigger than you can possibly imagine. And that's why, as I always say, you can never rely on the government. The only way to save yourself is to build your own wealth, is to start investing. Whether it's the US government or the French government or the UK government, these people are taking your money. And when you're spending other people's money, you're actually mismanaging it. I don't know a single government that has actually wisely managed any taxpayer's money. Either it's going to military spending, or it's going to some kind of welfare programs that over time turn into a complete disaster and bring the entire economy on the brink of catastrophe. That's why if you haven't started investing yet, then check out the first link in the description of this video and find out what are the top 5 stocks that you should be buying right now. That's it for today, guys. Thanks for watching, and I'll see you in the next one.